Welcome back to the Monocle Banking Podcast, curated by Monocle Solutions, your weekly account of the world of finance. And hasn't it been a week? AI in banking isn't just evolving, I think it's accelerating at an unprecedented pace. Just last week, DeepSeek introduced DeepSeek R1, an AI model that challenges OpenAI's dominance and a lot of assumptions that we've made about the pace and scale of innovation in artificial intelligence. JP Morgan announced its latest AI-driven risk assessment platform. Meanwhile, regulatory scrutiny on AI bias is certainly ramping up, with financial watchdogs worldwide questioning how AI models make lending and credit scoring decisions. I think the real question is, where do South African banks fit into this rapidly shifting AI narrative? Most institutions, I think, still see AI as something of a cost-cutting tool. But what if the real opportunity lies in unlocking new revenue streams? What if AI doesn't just change banking, but fundamentally rewires how banking is delivered? Well, joining me to unpack this is Eshmael Mpabanga, client account lead in the financial services practice at Accenture Africa. And we're going to go beyond the hype and into some of the hard realities of where banks are getting AI right, where they're getting it wrong, and how we can really position our financial services sector at the forefront of this revolution. Eshmael, great to have you on the podcast. And I've got to ask you first up, I mean, your career journey has been nothing short of fascinating, given, where you started out as an intern on the morning show in Perth on a radio station before heading into more of a comms role, PR, and then finding yourself at Barclays. How did you get involved initially in financial services? What drew you into the industry?
Wonderful. Thank you, Michael. It's an absolute pleasure to be on your show. Yeah, it's been a hell of a journey, Michael. I mean, I believe I come from good stock. My father was an investment banker back in the day, and my mother is a chemist. So they always kind of drove us to be the best at whatever field we decided, and they were very open in giving us and providing us with the opportunities where we can choose. And I was fortunate enough to have studied in Australia. I hold a master's degree. How do you know someone has a master's? They tell you. And I always had an interest in the media by virtue of the industry being able to communicate various topics in depth. Always fascinated me. And listening to people's stories, whether it's an everyday mom and pop or it's about families or it's about business. I was always drawn towards telling a story, and how those stories were crafted within the media absolutely fascinated me. So when I was at university, I was in Australia. I interned at, as you mentioned, I did the morning show while I was studying, and that gave me some really good insights into how to research content, how to create content, and how to find interesting people to have conversations with. And I also had the desire, I always wanted to be on TV. Anderson Cooper was my inspiration at the time, and I still love Anderson Cooper today. And I always had aspirations of being like the silverhead fox that he is. The way he told stories was incredible. But Channel 7 is probably one of the biggest TV stations in Australia, and I was lucky enough to work with the chief of staff there.
I've always thought, listening to you talk about the desire to tell stories and connect with people, I've always thought that banking is uniquely positioned in that sense. When we think of this technology revolution and building out apps and connecting with people, people engage with financial services daily. If it's a payment, if you're tapping your phone now, if you're transferring something online, it really is. It's the lifeblood of the body economic. And so as a bank, you have a really unique ability to tap into that human element and to service people and to understand what their stories are. I think more so than, say, an insurance company. And we look at things like InsurTech. If you're going to go out and engage with your insurer, it's when you're on board, and heaven forbid you don't actually want to claim, but when you do on the odd occasion have to, that's when you engage. They're very limited opportunities. Banking has this daily opportunity, doesn't it, to connect with people through technology.
Yeah, absolutely. And that's what drew me to banking, right, was the robustness of the banking landscape and how it affects people's day-to-day lives. And I think that's probably something that's carried me through my entire career. And when it comes to, I guess, AI within banking and customers meeting banks in their channel of choice, as an example, whether it's the app, it's on a website, or it's on chat, there will always be a place for banking and tremendous opportunity for banks to communicate with their client base. And that's where AI has fallen in and sort of given banks an opportunity to rapidly advance how they communicate, how they offer or surface their products and services, and how can they start doing it better.
And the common narrative around AI in banking has been about cost cutting, but your research that you've done at Accenture really suggests that the real story is in the top line, in revenue generation. Maybe you could just break that down for us. Where do you see the biggest revenue opportunities for South African banks using this technology?
It's a landscape that's changed tremendously, right? And in South Africa, as you know, we do have a robust financial sector. There's growing technology infrastructure. We've positioned ourselves and we're spearheading transformation. And the banking industry is going through this whole Gen AI phenomenon of change. And it's dynamic. So it's no longer just a tool for automation, but it's a catalyst for growth and innovation and operational excellence. So for banks, they need to ensure that they stay at the cutting edge or the forefront of where some of these technologies are. And there's tremendous opportunity. We are still grappling, and I guess it is still early days when it comes to fully understanding the governance of Gen AI and the policies that need to be implemented within the banks. But in terms of where they can start to generate revenue, there's an absolute upside to it. And there's a real story in one of the studies we've done at Accenture where Gen AI has significantly impacted growth rates over a span of 3 years. That just means in terms of personalization, streamlining operations. And we talk personalization, you want the bank to know who you are. And if the bank is in tune with your day to day and where you're going, you're most likely to continue with them. And that offers incredible incentive for the consumer as well as the bank itself in terms of realizing more revenue. So lots of new revenue streams that can still be unlocked for banks. It's a question of where do they start?
Absolutely. And we did see some early forays, didn't we? Chatbots prior to the
Yes.
whole kind of ChatGPT revolution. And the technology wasn't quite ready then. It still felt clunky. You kind of knew you were chatting to a machine on the other end. Now we're kind of at that Turing test level where it's actually very difficult to tell. So the technology has caught up finally. And so I think there were many bodies littered on the shores of those early forays into chatbots and many scars earned. And that's now, I think, made some of the decision makers slightly more cynical. Are you finding culturally that this is a conversation that the senior decision makers inside the banks are open to having now because we've seen this step change in terms of the AI revolution ever since ChatGPT became mainstream?
Look, I think the banking landscape in terms of the existing crop of executives are relatively young.
Mm.
So they've come through the ranks, and most of them are extremely knowledgeable and understand and have grown up with technology and how it's impacted their own personal lives and what it would mean to bring some of these technologies into the banking landscape itself. To answer your question, I feel executives, which is my day-to-day job, mind you. I mean, I sit with C-suite executives and executive level decision makers to understand what are their current needs, where are they going? And most banks talk about cost to income, return on equity, how they can start reducing some costs, how they can leverage technology front to back to ensure that they are future fit or future ready, shall I say. So I really believe that the executive leadership within banks are ready and are open and willing to have some of these conversations. And we are starting to see pockets of pilot projects and implementations coming into those institutions.
Well, that's encouraging, and it means we can then move on to what is possibly a bottleneck in the organization. There's skills, there's infrastructure. I mean, if we look at the legacy infrastructure, it's been an Achilles heel of many banks for a long time. I think many banks have also been on this journey to move much of their systems into the cloud. A lot of core still remains on-prem and kind of old COBOL type formats, but I mean, you mentioned Accenture's reverse engineering asset reducing legacy system, and it reduces documentation by 50%. I mean, is that enough? Can banks afford to keep patching legacy systems, or do they need a more radical overhaul?
Look, let's start with talent, right? I think it is a gap within most of the banks, and they need to start empowering some of their talent. And I see banks investing in training some of their employees in prompt engineering, as an example, and other related AI skills. So I think if we look at AI alone is not going to get us where we are without human expertise. So we need to kind of create that capability within the banks and empower talent and give them the opportunity to learn some of these new skills because that's where the industry is going and that's where technology is going. Going on to your point around reverse engineering, it is an incredible asset for us here at Accenture. It's powered by Gen AI, and it does reduce the legacy system documentation and the effort thereof by a large percentage. And again, still early days. We have an asset that is getting to a mature state where it can be deployed at scale to offer a transformational view for clients who are looking to grow their business as well as reduce some operational costs. So I really believe that they are looking at its ability, how they can forecast risk, how they can optimize pricing strategies and monitor compliance is very important. And I think Gen AI will enable banks to accelerate and modernize their technology and infrastructure as they go up, freeing up lots of time, lots of resources in order to innovate.
If we were to look at that and, back to a point of where to start, if you look at the global case studies, we do see banks reducing modernization timelines by up to half with AI. Where do you see the quickest wins for South African banks in modernization?
Look, I think it's more in the sales and service space where banks engage with their clients on a daily basis and sell their products and services. I think that's where we have the greatest opportunity, or where banks have the greatest opportunity to start realizing some of the benefits, right? That's where I would start if I was a top executive in a bank. But there's also opportunity to kind of leverage AI in terms of your back end and your processing and how you manage and drive your technology transformations to ensure you have the right technologies and that are able to scale and be fit for future.
If we look at the numbers, it just amazes me the fact that you've got this technology that reduces compliance errors by 92%. It's a phenomenal statistic. But on the other side, I mean, as compliance moves then towards something that's far more automated, does that not create a risk of some complacency creeping in where maybe regulators or banks assume that this particular part of AI is infallible and we run the risk of taking our eye off the ball?
I think compliance is obviously a major topic for banks. Sometimes banks are overly reliant on their compliant frameworks, but it has started to ease over the last few years. But these solutions in compliance definitely have reduced some errors, and they need to start automating compliance tasks. I'll give you an example. Let's talk about transaction monitoring or regulatory reporting as an example. If banks are able to reduce the risk on human error, I believe they've taken a step forward. Right? And it's not just about being faster, but it's about being more accurate and cost effective. So I really believe that it has a role to play.
When you look at the structured approach, and you do speak about taking this as a very kind of frameworked and structured approach so that you ensure you get those returns on investment and you get those quick wins, where do you see some of the decision making going with AI? Is it in, having AI powered dashboards now, maybe giving us predictive analytics to improve our decision making? Where do you see that tool becoming such a useful augmenting of what we do as the human inside the bank without being replaced now when we move beyond just automation?
Personalized client engagement.
Right.
I think that's one of the first places we need to start. Think about, I'm not sure who you bank with, but if you think about the relationship managers or your relationship manager, they have a ton to go through every day. And if we're able to provide them with some of these real-time insights, it just helps them and absolutely improves the level of client engagement. And it also retains them within the bank. They want to stay. If they're bogged down by day-to-day tasks that are cumbersome and we don't provide them with the right tools to make them more efficient, the likelihood of them leaving is very high. So from a retention perspective, I think it is critical. Customer data, we need to provide kind of predictive analytics. How do we look to the future? How do we look forward, shall I say, and anticipate certain client needs and expectations and nip those or deal with those at first point of contact? That's something that's incredible for the banks, and Gen AI has a role to play. So RMs need these solutions and these services, and it also helps in deepening their relationships with clients and increasing, as I mentioned, their retention rates.
I was amazed, and back to, I'm not beating down on insurers here, but I keep on getting text messages from a certain insurer that thinks I'm a Buccaneers fan when I'm a Kaizer Chiefs fan. And, you've got to be able to know that about people in a world where the information's accessible. If we look at it, it's a data-driven process. All of this, in God we trust. Everyone else bring data. We know the slogans at tech conferences. But in South Africa, how do we ensure that we prevent the exclusion of those with thin or no credit histories? How do we ensure that AI doesn't reinforce some of the systemic biases particularly in areas like lending and credit scoring, given that South African banks operate in a market with such extreme inequality?
Look, I think again, it's about the level of leadership within the banks who've been provided with the insights on the bigger economy. There is a large section of our economy that is unbanked. How do we reach them? How do we make communicating and giving people an understanding of the products and services within banks a lot easier? And I don't believe we should leave anybody behind, because making it accessible, and everybody now has cell phones. I think the rates of cell phone usage and the number of individuals with cell phones in South Africa has significantly increased, and especially in the African continent as a whole. And most of our banks, or our larger banks, have an African footprint across the region. So tapping into some of these tools like Gen AI, leveraging them accordingly, gives others who may not be able to understand products and services these banks offer an opportunity to find out a bit more before making a decision and then becoming a client within the bank.
When it comes back to your staff and your culture, it's interesting. I think all the banks, if you sit down and talk to them, they'll say, no, we've got a tech-first culture. It's our biggest line item of CapEx. We're all investing heavily on technology and we're digital first. But I can tell you right now, there are different levels of maturity in all of the big banks in the country. Where do you see the biggest skills gap? Are banks investing in reskilling their workforce fast enough? And where would you like to see, as a blanket approach, the biggest investments in order to bridge the skills gap if we're going to be interacting with this technology almost on a daily basis?
Look, if you look at South Africa's, I think it's the National Development Plan, I believe that is what it's coined, and our ability to engage with universities and schools across the country and offering them an opportunity to learn, discover, explore, and create some of these technologies at a very young age is where I believe we need to start. I think partnering with educational institutions and giving our kids the opportunity, and I've got 4 beautiful children who love technology. They already pick up iPads and iPhones and so on, and are able to find things on their own on YouTube. And kids are like sponges. So if we give them the opportunity, of us as banks and us as partners to the banks are able to collaborate and put together a program and engage with the government to give our children an opportunity, I think we'll be in a much better space into the future and to start leveraging these technologies, and they're constantly evolving.
Yeah, there's a big drive. I know Peter de Villiers of Clickatel and 200 other companies around building a tech skills framework, and it's going to require that kind of collaboration amongst business and reaching out to universities and the public sector as well. It's been a fascinating discussion, Eshmael. If we just look at it before we wrap up, what's the one piece of advice you would give to banking executives listening who are still maybe a little bit hesitant about AI adoption, worried about regulatory risks and concerns and data concerns and that kind of thing and privacy? What's your piece of advice to get them going?
I think don't pigeonhole yourselves. Think global. The global stage has tremendous or valuable lessons that South African banks can learn from. Those that have already leveraged AI, those that have failed. I mean, you touched on chatbots earlier. If you recall the Gartner hype cycle when chatbots started a few years ago, there was tremendous interest and then it tapered down, right? But I think that leading international banks that have used AI have been able to mitigate the risk of legacy systems. They've been able to modernize and cut those timelines significantly by up to 50%. And additionally, they've been able to onboard new clients, underwrite, reduce operational efficiencies. And I believe that we need to continue in that vein without taking the foot off the gas. As I mentioned earlier, this technology is evolving on a day-to-day basis. You touched on DeepSeek at the beginning when you and I were having a chat before we started. That has completely transformed the industry. And I really believe that executives within banks need to be cognizant of these changes that are coming, and you need to have the finger on the pulse in order to ensure that you move forward.
Absolutely. I mean, if you're not innovating with this technology, you can be sure that someone out there, one of your competitors, maybe a new digital startup bank is, and that's your direct threat and competition. Well, that's a wrap for this week's episode of the Monocle Banking Podcast. As always, brought to you by Monocle Solutions, your trusted guide to the world of finance. A big thank you to my guest this week, Eshmael Mpabanga, Client Account Lead Financial Services at Accenture Africa. Remember, if you enjoyed the discussion, don't forget to subscribe, leave a review, and share this episode with your network. Until next week, I'm Michael Avery, signing off.